All right. Welcome to the beginners trading session, weekly meeting. Today's the 23rd, and today, because we have several people in the group in this group today, several groups on this call today, um, what I'm going to do is start off with the beginner section session. And I have created a few slides. We did some the last beginners two session, but I have updated some slides. So I kind of wanted to go through those slides again with the basics of trading. So um, let me, okay, here we go. I want to, I probably should have downloaded this. Okay. All right. So let me share my screen. And let me figure out how to share this in. Okay. I don't know how to put this in presentation mode, but all right. So we're going to start from the beginning as if you're a beginner trader, you know nothing about trading. Um, we currently have a group that is going through this session right now. So that's how I'm going to start. So first, we're going to talk about terminology and the basics. Okay. What we're going to cover is the Forex background, the currency pairs explained, commodities versus futures versus indices, um, the importance of the dollar, the best time to trade, how to make the money trading, um, two types of analysis, and I took out correlation. So we're not going to talk about correlation. But and then the different styles of trading. So with that being said, let's go move on to the next slide. All right, what is Forex? As we know, currency trading, also known as Forex, which is short for foreign exchange, is the largest financial market in the world, circulating over $7.2 trillion a day on a day-to-day basis. So that means the money that people are losing in the market and then the money that people are like, it is a lot of money. It is the largest financial market out there. Um, Even against stocks, even against options, even against Forex is the largest. Okay. Um, so this market determines the foreign exchange rates for every currency. It includes all aspects of buying, selling, exchanging currencies, um, at current and determined prices. Currency trading is about speculating the value of one currency against another. And I think we talked about that already, um, with the hopes of making a profit in return. And I'm going to dive into that in just a few. Um, Again, speculating is all about taking a financial risk. And what we mean by that is you can't win every trade. You cannot win every trade, but my goal for you is to at least win 85 to 90% of your trades. We can't win them all. And even if we lose a few, our losses should be very minimal and our gains should be the max. Okay, so even if we lose, the winning trades should outweigh the losses. Um, let's see, I've already said that. Let's see. So how does it work? So currency values change every day, um, due to every day. So what we do as traders is take advantage of the fluctuation in the currencies or the way the market moves. So, um, once we get to what the pip is and what the tick is or what the points are, and that's just every time a price moves, one little pip, one little tick, whatever your um whatever your um whatever you're trading, your contract, your lot size, whatever it is. So I've always said if you're trading a dollar for every tick or every pip, that's a dollar. Every tick is a dollar. If you're trading $10, every tick is $10. So when you invest your money into the currency pairs, make the profit off of the analysis that you make. You make a profit or you lose a trade. But again, I'm here to help and show you how to have more winning trades than losses. Okay. In general, the exchange rate of the currency versus another currency is a reflection of the condition of the country's economy compared to other countries. The Forex market, again, is the largest market in the world. So we are going to take advantage of that. So let's talk about the currency pair. So the currency pair or the exchange rate is quoting one currency against another. So as you can see here, you have the Euro USD. We're comparing the Euro dollar against the USD dollar or the USD, which is the US dollar. Um, Whenever you see an exchange rate like this, the first quote is um, the first exchange is the base quote or the base pair. So the euro is the base, the USD is the quote. The base is always the first currency, the quote is always the second currency. And if you're looking at it this way, let's just say we know that, and well, maybe everybody don't know, but I know that the value of the dollar is dropping. So that means Euro USD should be buying because the dollar is the quote that's selling, which means the euro would be going up. So if I were trading Euro USD, I would be looking for buys on Euro USD. Does that make sense? And I heard somebody else join. Hold on. Let me see. Does that make sense? And hold on just a second because I lost y'all. I lost you. I lost you. So, okay. Okay. Does that make sense? Or any questions?
Yes.
Okay. Any questions on that? So each currency is identified by its ISO, which is a standardized way to name currencies using letters. So let's So let's talk about what I mentioned about Euro USD. So Euro USD equals um when I typed this up at the time, it was 1.15130. And I am going to switch it over to Euro USD. So I am going to share my trading view. So you see, this is the Euro USD. Right now, the market is closed, but the current price, based, you see it right here with this little dotted line right here. The current price is 1.15130. So that is where I got that number from. Okay. So let me go back to my slide. 1.15130. So the base currency is the euro and the quote currency is the dollar. This is the quote for the European currency against the United States currency. And because euro is the base currency, that's the value that you look at to $1 to buy one US dollar. So if I were to go to um, a European country and I go exchange my $1 US dollar into euros, I would get 1.15130 for my $1, for my one US dollar. Does that make sense? All right. So I'm going to assume that everybody understands that. So we're going to look at the major currencies and which um, are the US dollar, which is the most traded, the euro, the Japanese yen, the British pound, the Australian dollar, and then the Canadian dollar, and then the Swiss franc. Okay, so let me put that down here. Okay, so the major currencies, meaning one um, currency against the next. The major ones all have US dollar associated with it. So GBP USD, USD CAD, anything that has the dollar attached to it, either as a base or a quote, is considered a major currency because the US dollar is the most traded. Even with the value of the dollar going to hell right now. Um, the dollar is the most traded currency. And as I stated here, the major currency pairs all consist of US dollars. So if you see anything with the dollar in it, it is considered a major currency. Um, all right. So then we have what's called cross pairs, and those are any pairs that do not include the US dollar. CAD JPY, AUD JPY, AutoCAD, GBP NZD, Chef JPY, and Euro GBP. None of these contain the US dollar, so these are considered cross pairs, but these are pairs that are also um, traded a lot. JPY, because JPY, which is the Japanese yen, I know for me, had I gotten, so let me just say the pair that I talk about that I've made my $30,000 off that I still make money off of to this day is GBP JPY. If I had gotten into GBP JPY um when I first started trading in 2020, because it has been buying ever since August, which is the month I joined, it has been buying since 2020. And just so you understand what I mean when I say that, um, GBP JPY on the month, I joined back in August of 2020, right here, and it has been buying ever since. If I knew what I knew now back here, and I was buying this up to here, y'all probably wouldn't know me today, okay? Y'all probably wouldn't know me. So we're talking about this is 1,428 days from August of 2020 to what day was this? To I can't see it. What whatever day this was. This was back in oh, that's 2024. Let's go to 2025. To November of 2025. And let me go from August to 2025. That's 1900 days. That's 6,000 pips. Even if I just put in a trade for $1, that's $6,000 that I would have. $6,800 to be exact. But if
What
I
was the sorry to interrupt, but what was the initial investment when you made the over the 6 weeks you said you made the
I start
30K?
I started out with $100.
Oh wow, that's impressive. Okay.
Started out with 100, flip that to two, then flip that to four. Like I just kept flipping it and doubling it, doubling it up. So yeah. And there were some losses in there. Like it wasn't all wins. Um, but over the 6 weeks, I was very not just consistent, but disciplined was is the word that I would use because I would only look for the most optimal trade. So this just goes to show like once you know what you're doing, once you know what to look for, and for me, this would have been a break of structure. This just would have been my demand zone, and that's how I trade. A price would have came here and took off. And that's all I got to say about that. That's all I got to say about that. Like I just know what to look for. I know what to trade. Now I know what to look for and I know what to trade. And that is where I want to get you all to. So let me go back to my slide. All right. So let's talk about the importance of the dollar. On the chart, it's called the Dixie. The U.S. economy, again, is the largest economy in the world, making the U.S. dollar essential in Forex, primarily because it's half of every major currency pair. And so I'm going to be going back and forth on this slide so you can understand. So I'm just not reading off of um, some slides. So if I look at Forex pairs, you see the US dollar is part of every major currency, other currency there is. The US dollar is always going to be involved in most of the other currencies. So that is why it is considered um, very essential in the Forex market. The US dollar is the most added currency, making up about 85% of all transactions. And the US economy is centralized part of the exchange market, and the movement or fluctuation of the market has a lot to do with the news in the US. With that being said, we know that if um, Jerome Powell is the guy that comes out and talks about the interest rates. As soon as Jerome Powell talks, this is considered fundamentals, which I'll get to in a second. Soon as Jerome Powell talks, price is either going to fly up or fly down. That's what the fundamentals are. I personally am not a fundamental trader, meaning I don't really look at the news based on and to see, what I'm going to trade. Um, I see the structure of the market and I trade based off the structure of the market. Todd is very in tune with the fundamentals. So when he returns, I will definitely have him explain the fundamentals in depth because I don't trade it. So yeah, I really don't. I really couldn't even I mean, I can explain that, if the president says something crazy um on his platform or comes out with something crazy, it usually moves the market. But I will say this time around, the first time around, it was crazy. This time around, I think the market doesn't react as harshly as it did the first time because I'm just going out on a limb because we don't know if what he's saying is going to be accurate or not. Like it's almost like you got to go find the information to make sure it's accurate before the market moves. So, so as far as him saying, unless he just comes out with something just crazy, um, the market will move accordingly. But like I said, this time around, it's not as bad as it was the first time. Like the market would drop. So right now we have Bitcoin. I don't know why. Well, I kind of know why Bitcoin is dropping, um, but because I just trade off of technicals, that's why I know why Bitcoin's dropping. Everything, once it breaks structure, it has to reset itself. But we'll get into that. All right. Commodities, exotics, indices. So besides currency pairs, we also trade other things like commodities, exotic, and indices. These are advanced assets because they move a lot more and you can make a whole lot more money um, off of those moves. However, in most cases, you have to have a little more capital. Now, I will say with indices, I don't know. Well, with indices, I don't trade exotics, but with indices, you don't necessarily have to have a lot more capital, but it is best if you do. However, and I'm putting that however in there because with indices, you can trade mini and micro. And what that means is usually a 0.01 on a mini is 10 cent a pip for an indice. Um, and I'm going to tell you what the indices are in just a second. And then for the micro, if you trade the micro, a 0.01 is a penny a pip. So even if you have $100 in your account and you're trying to trade an indice, you can trade the micro and trade a penny a pip versus 10 cent a pip or a dollar a pip. So, but trading these, like I said, it's very volatile in a way, maybe if you trade based off market structure, I may disagree with that, but um, but they say it's volatile, so then we're gonna say it's volatile, okay? But you may want to make sure that you have the capital to cover any sudden moves. All right. Um, Commodities include um, gold, silver, platinum, and oil. Now, up until recently, I just started trading gold, and gold has been very good to me. And I trade it based off of how, and I trade anything else off of market structure. So I don't get caught up in, gold is volatile, I don't get caught up in that. I trade it strictly off of market structure, like I would trade a currency pair, and I don't have a problem with that. Again, news doesn't affect the way I trade. That's why I don't trade it. Um, and advanced commodities or exotics I don't, like I said, I don't trade exotics, but I trade commodities, I trade currency, I trade indices. So the exotic currency pair consists of one major currency and then one currency from an emerging market. So the USD dollar versus the South African, which is the ZAR. The USD ZAR is the dollar versus the South African. The USD Chinese, the USD Danish krone, the USD, which is the dollar against the Mexican pesos. So these are all exotics. There is something, and Ty would have to explain it with this USD Mexican. As long as I think if the Mexican is the base and it is in profit, it's almost like you're in profit, but then they give you additional funds for being in profit. Todd got has to talk about that. I don't know. I've heard him say something about that before. I just didn't understand it, but I'll make sure he talks about it. Okay. Um, so let's talk about indices and the sessions, the sessions that they fall under. Okay. So indices is short for the stock index, includes things such as US 30, which is the Dow Jones, SPX 500, which is also known as the S&P 500, the NASDAQ or in NAS 100, which is also known as the NASDAQ. So really quick, I am going to pull up a new window. I'm going to pull up a new window and I'm going to share. And I'm going to share. So if we look up um, Dow Jones and why it's a stock index, you will see that stocks included in the Dow Jones index. All right. Okay, here we go. How many stocks are included? So there are It make up of 30 companies. So if you're trading the Dow Jones or US 30, I don't want to accept, I don't want to accept none of them. Um, you are actually trading, let's see if I can see the list. You are actually trading shares of, let's see, I'm trying to find all the companies that are included in the Dow Jones. Hold on. Companies included in the Dow Jones. Okay, here we go. The 30 companies that are included in the Dow Jones. So if you're trading US 30, you're trading um, 3M, Amazon, American Express, Apple, Boeing, Caterpillar, Chevron. You're trading all these, you're trading a share of all of these companies that are included in US 30. Same thing with S&P 500. So if you're trading the S&P, you're trading all of these companies or stocks of these companies that are included in the S&P. So instead of like going to, let's find one that we all know. So instead of just going to Amazon and trading Amazon and investing, so you know there's a difference between they're almost the same, but investing and then trading in stocks. So you go to um, your broker, which could be E-Trade or Coinbase or any of the investment brokers that are out there. You go, you look for the symbol, you look for the AMZN symbol, you put some money on it, and then you just allow it to trade however it's going to go. Now the difference is the risk and the margin is less when you trade when you're investing in one particular stock of Amazon. When you're trading it, that's when it's a little more when you're trading the S&P, that can be a little more volatile. But that's why it's volatile because it is trading for all of these companies within one index, if that makes sense. Any questions? If not, then I'm gonna move on. Um, Let me go back to here. All right. So um the best time to trade these indices are in New York session. The Dow Jones, the S&P, and the Nasdaq. The best time to trade it is in New York session. Occasionally, they will move during the London session, but for the sake of like if you're trading and you're trying to map out when you want to trade, what you want to trade, how you want to trade, The best time to trade, if you ever decide to trade this in the near future. Now, as a beginner, I'm going to tell you, don't try it. I'm just going to say, don't try it right now. But as you learn, you may want to start trading these indices. And the best time to trade it is during market open, or you analyze your chart before the market opens at 9:30 a.m. Eastern Standard Time. You analyze your chart and then you wait for the market to open, and it's either going to play out like you think or it's going to go crazy. So, um, so that's for those indices. During the London session, you have JER 30, um, the UK 100, the Frank 40, and ESP 35. Now, ESP 35, I've never heard of that one, but you would trade these during the London session. These are indices, and I'm sure if I go to Google to find out what companies are included within these indices, it will tell me there are 100 in the UK, there may be 40 in the Frank 40, there may be 35 in the ESP, but those are best traded during the London session. And then the JPN 225 is best traded during the Tokyo session. Okay. Um, all right. Best days to trade. The biggest movements in the four major currency pairs, which is Euro USD, GBP USD, USD JPY, USD Chef, move on Tuesday, Wednesdays, and Fridays. Now, I try not to trade on Fridays unless I see something. If I see something happening, I'm gonna try to get in it. But I usually try to get out before the market close. Um, Usually it is more of a scalp or day trade on a Friday. Sundays, the only reason I look at the chart is because I teach. I have the you all here at the 3 o'clock call. Then I have another call at 7 p.m. So that's the only reason why I'm looking at the charts on a Sunday. Otherwise, if I didn't have people that I was teaching on a Sunday, I would not be looking at the charts on a Sunday. Why? Because when the market opens on Sundays, it's going to pretty much consolidate. And if you know anything about consolidations, you looking at the candles doing the same thing for a 1 hour, 2 hour, 3 hour. Like you're watching, and I call it insanity. You're watching the chart do the same thing for hours, 8, 9, 10, 11, 12 hours. So, like, what's the point? Um, so that usually happens at the at market open, or the market will gap open, and there's really nothing you can do until market shows you structure, but we'll get to that. So, the best time to trade is when, especially when it's a USD, anything, when it's a major pair, or major currency, the best time to trade is when the New York and London session overlaps, which occurs between 8 a.m. and 12 p.m. So 8 a.m. Eastern Standard Time, that's usually when I look at the market on a either Monday, really Tuesday, to be honest with you. Um, from 8 o'clock by 9:30, I will have really it only takes me about 5 minutes to analyze my chart. But at 8 o'clock, I can look at it. I can set up a limit or analyze the chart for when the market opens. So when the market opens, I already have in my mind what I'm planning to trade if price comes to where I want price to come to. If it does not come to me, I don't chase it. If it don't come to me by 12, 1 o'clock, usually I try not to even look any further, and then I just go on about my day. Because by 1 o'clock, price is really starting to slow down. The market is slowing down, and um, and you don't get a lot of movement. Sometimes you will, but most of the time you won't. Um, Times to look out for or stay away from the markets, depending on the skill level, right, is after 12 p.m. on a Friday. Like if you haven't had your trade in by the week, once Friday gets here after 12 o'clock, there's no need to try to get in a trade. One, it's not going to move as much. Two, you're going to have to hold your trade over the weekend. There are swap fees that are charged when you hold it over the weekend. When you hold it over day by day, there are fees that apply. So over the weekend, there are more swap fees. So um, that's why I say just if you can get out by market close on Friday, then get out the trade. Again, Sundays when the market opens, because that's consolidation. Major economic news or report when major economic news or reports are released. Um, because I don't trade news, I typically don't look at the news reports. Um, I don't get any notification of anything. There are people in a group that will post some news if anything big is happening. There are certain news days that happen on a constant, which like NFP is usually the first Friday of the month, or however that is. And I will show you how to look at the news if you're interested in checking out the news before you get in a trade. I will definitely show you how to look at that. And the Asian session. The Asian session is, like I said, when market opens, that's the Asian session. So uh, it doesn't move. It's a consolidation session, and you once you start back testing, you'll see exactly what I'm talking about. All right. So there are two types of analysis. So in order to understand or have an idea of where the quote is going, you have to analyze the chart. So the chart that I showed you, those are the charts you will be using. Um, and you need how to know if you're going to buy or sell. So you have the technicals, which I mentioned, and then you have the fundamentals. The technicals are the price action or the charts that I showed. The fundamentals um, is when there's economic, political, social news, anything beside the chart. And I spelled anything wrong. So the whole purpose of trading is you're looking at the charts or you're um, checking the fundamentals to make predictions based off of previous movements. Like I said, back in 2020, if I had known what I know now, and I knew the GJ was going to be buying the way it was, I would have known to put in a trade. And that was based off of price action prior to August of 2020 that showed me that price was likely going to buy. You'll get there. Okay? You will get there. All right. So, let's talk about buying versus selling. If you want to buy, that means that you're expecting or speculating or analyzing that a pair you're trading is going to increase. So, buy is when price is going bullish, you want to buy. Selling, if you want to sell, that means that you're expecting or analyzing that the pair you're trading is going to decrease. So that's selling, or if price is going bearish, you're going to be selling. And based on, if you remember me saying, if the dollar is going to be selling, that means Euro USD should be buying. And I'm going to, let's see, let's share, see if I can find. Euro USD. So we're this is one, I'm on the monthly chart, and this is 1 month, 2 months, 3 months, 4 months, 5 months. There's a consolidation 6 months, consolidation 7 months. It went up a little bit 8 months. It went down a little bit 9 months. So this, it has been going bullish, Euro USD, because the dollar has been going bearish. So if I put these against each other and I go to the Dixie and I go to the monthly, you see how this was going down, so this was going up. You see how it consolidated here? It's doing the total opposite. This dollar is doing the total opposite of what the euro is doing. So that is the prediction that you make. If this is going down, then if you're trading Euro USD, then you should be buying this because the dollar is the quote, which is the second pair. The euro is the first pair. So if the dollar is going down, you want to buy Euro USD. And that's how we look at that. Now, I personally think, and let me just based off of what I know or how I trade, that we had a break of structure and we have a supply zone. So I am expecting the dollar to keep selling and this to buy up into this zone, then to either sell or break this structure to keep buying. That is how I analyze my chart. When I said it takes me 5 minutes, it really takes me about 60 seconds to analyze my charts. This is our swing high based off market structure. This is our supply zone. But once price gets there, you analyze it to determine when, if a shift happens, you're going to sell it or if you're going to continue buying it. And that's how that works. Um, Let me go back to, where was I? Okay. So that's all I have for the slides today because I haven't finished the rest of the slides. Okay. Um, so that's all I have for today. So any questions on that so far? Those that, like I said, we were just going into the basics. I'm gonna I'm gonna dive into each of those basics a little bit more in the next class or the next session. So anything you have, um, actually, I did do a few more slides, but I'm not going to go into them today because this is what we will cover the next time. We will talk about pips, lots, brokers, orders, buying and selling, limits, stop losses, take profits, the different trading styles. We will talk about demo versus live. We will set up a demo account. We will talk about risk management, trading psychology. Um, I have a trading plan. If you were on the last call, the trading plan, let's see. Oh, why can't I? Okay. The trading plan, um, the beginner's trading plan. I started jotting down the step by steps that I do, the checklist that you need to follow before you enter a trade. So we will get into this further. Um, but right now, I don't want to take y'all there because that will be here all day.
I
Um,
have a quick question. You
yeah.
said buy is bullish and
Yes.
sell is bearish?
Yes.
Okay, just want to make sure.
Yep. And I'll make sure I update that on the slide. Because once I finish these slides, I will drop them in the group so you all can have to review. Yep. So any other questions for today with regards to the beginner information? So let me see who's on here. I think everybody's from the beginner from the session, the second session. So I won't even go over um analyzing the charts because we're not there yet with you all. But we will get there. We will be there in a few weeks, okay? We will be there. So any other questions? None? All right. Well, that's all I have for today. If you like go back over this recording and you have any questions or you see anything you want to ask about, definitely drop it in our chat. And I will be glad to answer any questions you may have. All right. That's all I've got for today. Oh, wait a minute. Lakeisha says oh, I owe you some info too. My apologies, kids are sick of that. What you owe me? What you owe me, Lakeisha?
I said I was going to send you that info to do the slides.
Yeah, yes. You see how hard I've been working on this slide.
Girl,
I've been working hard on those slides. But okay, yes, please. Please
I
send.
will get with you. Give me we going into the holidays, so
And so next week, I don't know if I will be on I may. I know that next Sunday I'll probably be driving back from North Carolina. So, I don't know if I'll be on the call or not. We'll see what happens.
are we doing Sundays instead of Tuesdays now?
We're going to do Sundays for now.
Okay, great. Great, great,
Um,
great. Okay.
just because with me going back in the office, the drive is like an hour out, depending on traffic. It could be an hour and a half, it could be two. So, um, so yeah. So let's just hop on Sundays and maybe I can just merge these two groups all together and then, stop stressing myself out.
Okay.
So
All
yeah,
right.
I think Sundays would be best for now, at least now anyway.
Sounds good. Okay.
Okay. All right, ladies, that's all I have for today. Don't forget if you have any questions, let me know.
All right. Thank you. Bye.
Awesome. Bye.